Hello. Welcome to my channel, my dear friends. My name is Avilash and I'm your trader next door. In this video, I'll be analyzing the chart of EURJPY, Euro Japanese Yen. So if you're watching my videos for the first time, then please subscribe to my YouTube channel for regular market analysis. And do not forget to check out the Forex analysis playlist for the analysis of other currency pairs. So let's get started. So this is a chart of Euro JPY, and as you can see, I'm in the 4 hours chart. Okay, my favorite 4 hours time frame. So this is the 4 hours chart of Euro JPY. And as we all know, after the Fed's meeting, the market became very volatile. Currency pairs like USD JPY, USD CHF became very bullish, whereas currency pairs like GBP USD, Euro USD, Euro JPY saw some huge selling pressure, and even gold USD is still falling. Okay, so Euro JPY is also under the seller's territory, and you can see that. Okay, overall the trend of the market was towards the upside. Market was very bullish, but right now market is under the heavy dominance of the sellers. Just look at these candles. Okay, just look at these candles. So there was support. Okay, there was support, and in almost every currency pairs, the the levels are gone right now. Okay, market is trading way above the levels or way below the levels. Okay, almost all the levels are non-existent right now. Okay, and as I always say, for a trend reversal, okay, for a trend reversal, we always need an inverted V pattern. So whenever a market is in uptrend, we need an inverted V pattern for the confirmation that yes, the trend of the market has changed. Okay, and if a market is in downtrend, then we need a V pattern. Okay, and right now we can see that we have the inverted V pattern right now. Okay, and we can right now say that yes, the trend of the market is changing or Euro JPY has changed. Right now we cannot consider Euro JPY is an uptrend. Okay, because we can clearly see that after the Fed meeting things have changed, the market has changed, right? Okay, so if I take you to the weekly chart, then you can see that undoubtedly market is very bullish. Okay, but right now, market is coming down with price rejection from above. So overall, okay, the overall structure of the market is towards the upside. Okay, the weekly chart is also telling us. But right now, the trend has changed. The trend is towards the downside. Therefore, considering the trend of the market, we should only look for selling opportunity. If you're thinking that Euro JPY, okay, Euro JPY has come down a lot, okay, it is in the overbought zone, therefore I should go ahead and buy, then that will be a very big mistake. You should never trade like this, because see, if you go ahead and place the buy order here, okay, then after a pullback or retracement, market will fall again, or market may fall again, and in that case you'll be in heavy loss. Therefore, in this type of market, or whenever a market changes and a situation arises like this, the only trading opportunity that is available to us is wait for the market to come down to the perfect position, or wait for the market for a retracement or a pullback. Okay, because see, seeing these big red candles or seeing this heavy selling pressure, okay, if you short the market right here, then there is no proper place to place the stop loss. Okay, where will you place the stop loss? Okay, there is no proper place or zone to place the stop loss. Therefore, this is not the ideal position to short the market, and you cannot also buy here because market is falling. So there is no logic to go ahead and place the buy order. Therefore, you cannot short the market also, and you should not go for buying order also, because this is not the ideal position. And if you have already short the market here, or if you want to short the market here, then you may make some money today because of the huge volatility. But in the long run, okay, you will always be losing money for compromising with the trading discipline. Therefore, this is my request Never compromise with the trading discipline. Okay. Wait for the opportunity. That's it. So what do you want? What you'll have to do then? You can see the stochastic RSI is also in the oversold zone. Therefore, wait for the market to go up. Short the market at the pullback. Okay, not at the bottom. Okay, right now market is at the bottom, or seems like market has reached the bottom, but this is not the ideal point. Short the market, and I have already explained why. Okay, so let the market go up a little bit. Okay, and or if possible, wait for the stochastic RSI to go to the overbought zone. When stochastic RSI will be going down again like this, when stochastic RSI will be going down, okay, from the overbought zone, then just look at the chart. If you see that price is struggling or bulls still does not have the required strength to take the market upward, you can short the market. Okay. Or in simple words, short the market at the pullback, short the market at the retracement. That's it. Okay. It may be here, here, here. I do not know. Okay. I do not know. Nobody knows. But only short the market at the retracement. Okay. Because this is not the ideal position to short the market, and as the market has uh, broken the support and resistance level, therefore there is no proper support or resistance level also in the market right now. On 50 moving average is also quite far away, therefore wait for the pullback. That's it. Okay, this is my request, and let's see where the market goes. So hopefully you have understood. If you have liked the video and found the video informative, give a thumbs up and subscribe to my channel for regular market analysis. Thank you so much. All the best. Take care. See ya tomorrow.